Have you ever wondered how a Japanese clothing brand quietly grew into one of the world's biggest fashion empires, rivaling Zara and H&M without chasing fast fashion trends? Meet Fast Retailing, the parent company of Uniqlo, and one of Japan's most remarkable global success stories. In today's video, we're unpacking Fast Retailing's business model, financial fundamentals, and what's driving its global growth. At the heart of Fast Retailing is Uniqlo, a brand built on the philosophy of LifeWear, timeless, functional, and affordable everyday clothing. In 2024, Fast Retailing generated over 3.1 trillion yen in consolidated revenue, and Uniqlo contributed the lion's share, 2.64 trillion yen, across 2,495 stores worldwide. Uniqlo International brought in 1.71 trillion yen, with standout performances in Southeast Asia, Europe, and North America. The GU brand kept focused on fast fashion at value prices, added another 319 billion yen, while their global brands portfolio, including Theory and PLST, contributed 139 billion yen. What sets Fast Retailing apart? A vertically integrated model. From design to delivery, they control the process, allowing rapid response to trends, less waste, and consistent quality. That operational control is a serious competitive edge in global retail. Let's take a look at the fundamentals. And here's where it gets interesting. Over the past year, revenue grew by 14%, outpacing the apparel retail industry average of 11%. Their net profit margin sits at 12%, again above the sector norm. The company's return on equity is a healthy 20%, with a conservative debt-to-equity ratio of just 21%. That's well below the industry's 36%, indicating a strong balance sheet and cautious use of leverage. And while valuation metrics like PE and PS are in line with the industry, Fast Retailing's free cash flow conversion is a standout, with a lower price to FCF ratio suggesting operational efficiency and prudent capital allocation. In the first half of fiscal year 2025, Fast Retailing delivered record-breaking results, with revenue reaching 1.79 trillion yen, up 12% year-on-year. Operating profit climbed 18.3% to 304.2 billion yen, while gross margins improved slightly to 53.3%. Uniqlo Japan continued its strong performance, with sales rising 11.6% and operating profit jumping over 26%, boosted by strong seasonal product alignment and increased tourism. Internationally, Southeast Asia, North America, and Europe posted robust gains, though mainland China saw a pullback due to product-market mismatches. GU's revenue inched up nearly 4%, but profitability took a hit from higher operating costs. Global brands returned to the black, thanks to restructuring efforts, with PLST and Theory driving margin improvements despite lower overall sales. In terms of valuation, Fast Retailing trades at a PE of 34.9, almost identical to the industry average. However, its price-to-free cash flow ratio is lower than peers, possibly reflecting stronger cash generation. That suggests the market may be recognizing the business's efficient operations. Though, of course, valuations can fluctuate based on broader sentiment and sector trends. Fast Retailing's journey from a small Japanese retailer to a global powerhouse has been built on consistency, operational discipline, and a clear brand identity. Whether you're a fan of their clothes or curious about international business models, it's a fascinating company to watch. If you found this breakdown insightful and you want to stay informed with factual, well-researched global stock insights, without the hype, subscribe to our newsletter. It's free and it's made for curious minds.